Good Thursday morning. We are on the floor of the New York Stock Exchange with Jim Cramer. We are 90 minutes away from Jim Cramer's monthly ActionAlertsPlus.com investor call. Jim, folks can go to ActionAlertsPlus.com and sign up.
They have to. I mean, I met with my team this morning. We were doing, in midnight, we were going back and forth, and what's really matters is that we're literally trying to figure out how to get it, how to keep it to an hour. People want as much. They thirst for the knowledge. They thirst for the education. We are thirsty, but we will deliver.
And Jim, we talk about how August is historically a volatile time for the markets. You need to listen to this call.
Look, I mean, we talk about self-discipline. We also talk about what I regard as being a moment in time where we shouldn't even have to do any work. I remember whole periods when I was at Goldman Sachs where I would be the only guy as my team in there, and I'd be sitting there twiddling my thumbs because you couldn't make outgoing calls. There was no one there, and certainly didn't get any ingoing calls. This conference call is the opposite. It is packed.
Okay.
Thank you very much. 11:30.
ActionAlertsPlus.com. Trial the club.
Yeah, trial it.
You're going to have a great
The club
time.
is dynamite. I wouldn't set it up if it was dynamite.
All right, Jim, let's talk about the markets because we are near record highs.
Oh, yeah.
What do you think?
Well, I would tell you, I don't want to steal my thunder from
Yes.
the conference, but from our club call, but we remain in a situation where individual stock news continues to trump what I regard, and that's no pun intended. I mean, this morning I was watching our 5 o'clock show, and the people come on and they just say, look, the tariffs. And look, the tariffs aren't helping the stock of Deere. I would not own Deere because it's a farmer related, but I do believe the farmers will get a check and then it'll go to Deere. But it's just hard to relate, and I point that out because I'm on this Roku call last night. Okay, so maybe you think Roku doesn't matter. I think it does matter because what Roku is about is an ecosystem, and if you find an ecosystem, you got to run with it. I'm on the call for Yelp, and you'd say, well, Yelp doesn't matter, but Yelp is part of the web. And then I'm on the call for Twitter not that long ago, and for Snap. They seem to be targeted. They're no longer, I mean, there's a lot of stuff about Twitter and Jack Dorsey. They're not seem to be as, they don't have the fascination. If Facebook's Instagram does, we're going to discuss that on the comps call. I'm not that happy there. But it's a remarkable moment where individual companies keep delivering unless they're in the Permian.
Well, we'll save oil for your call. But you mentioned Roku, 45% revenue growth.
And the average revenue per user is so big, and they have an advertising stream, and they're talking about being embedded. Look. Let's say your cell phone. Okay, it's Android or it's iOS. It's Apple. Well, what they're saying is, look, it's either going to be Roku or some other system in an original equipment manufactured TV. And who am I to disagree with this? I think they are dead right. Now, a lot of people, when you speak to, you got to be careful about the anecdotal, but a lot of people, when you speak to them, they'll say, hey, listen, I'm using the Fire Stick. But Amazon didn't wipe them out. It's another company that Amazon did not destroy.
So to your point, Roku is diversified in their competition, so to speak, with Amazon, but Sonos, as you talked about on Mad Money last night, is a different story.
Yeah, Ben Soto and I were just going back and forth. Look, the problem with Sonos is how many Sonoses can you have in one house? And remember, not a lot of consistent profitability. So Sonos is a problematic situation. Sonos we actually analogize to Fitbit. And that's, of course, the kiss of death. But I think Sonos is better than that.
Maybe another example of a good product, but not necessarily a good stock.
Yeah, you have to be very careful with the old Peter Lynch method of investing. Remember what he said. He ran Magellan Fund for years, that you can buy the stock in a product that you like, but only after you've done the research, not just because you like it.
It's an important point. All right, Jim, Real Money's stock of the day is Rite. They're calling off their merger with Albertsons.
Yeah, I think the FTC's playing with fire here. Now, obviously, the government didn't seem to want this, and the stories are about how Rite shareholders didn't want it, but I'd be very careful here. The government is... They want 3 players in the drugstore. They want Walgreens, CVS, and Rite Aid. But Rite Aid doesn't have the balance sheet to be independent. And Rite Aid may not have the balance sheet to be a credible competitor. This is the opposite of what happened a few years ago when Safeway wanted to merge with Albertsons. They had to spin off more than 100 stores, and they found this Alfred Hagen's that bought them, and Hagen's didn't have the capital, and then those stores closed, and a lot of them reverted to being Safeway. I think that they should have let this deal through because this is one of those that's far more like T-Mobile and Sprint. Maybe you need to let those merge in order to be able to compete in 5G against China. So one of the themes of our show today of Squawk on the Street was the government's more activist in blocking things than they were under Obama. I mean, it's interesting because FERC was blocking a new way to be able to build pipelines. FTC is very, I think, very, what you could say, pro-consumer. I don't think it's going to work out that way. Justice Department is still fighting the Time Warner AT&T deal. This is the most activist group of agencies against corporations that I can recall.
So what does that mean for the market? Because we know M&A helps
I don't
stocks.
know. It's obviously not good, but look, not every company merges. So I don't want to draw any conclusion, but I'm just it's more of an understanding that deals have to be well thought out. In other words, this doesn't block Dun & Bradstreet from going private, but you've got to really start considering Chinese antitrust, because that's NXPI. You got to be considering whether the FTC, Antitrust Department, or Justice Department, whether they're going to create an additional risk. And that's what we need to think about. I will address this in the NXP portion of today's 11:30 conference call.
And yeah, I mean, if we do get some sort of M&A slowdown, and that's a big if, we still have the buybacks to kind of keep a floor.
Right, but at the same time, I mean, I'm conscious of the fact that Action Alerts owns Goldman Sachs, and Goldman Sachs needs to see a steady drumbeat of deals. Look, there'll be deals. It's just that it's an additional risk factor. Let's call it that.
Okay, Jim, we'll leave it there for right now.
Thank you.
Much more information from Jim on the markets in his monthly investor call.
Right, 11:30. Now, why am I soliciting this? Well, I mean, frankly, I've been working since Sunday on it, and I just wanted people to hear it. I'm throwing a play.
Okay. 1 hour long, actionalertsplus.com. We'll see you there.